So, welcome to the Gold Investment Letter. Today we've got a friendly webinar with Rob McEwen of McEwen Mining. It's May 12th in the afternoon, and this is take two. We had a snub yesterday with Rob. He's kind enough to re-record the webinar. How you doing today, Rob?
I'm feeling great. Thanks, Eric.
Great. So before I run through this list of questions, which I wanted to make some of them a little bit more personal, you're an interesting character in the mining business. You've had a lot of success. I think a lot of the retail, high net worth individual investors really appreciate piggybacking on someone who's so heavily invested in their company, which we'll talk about in detail with McEwen Mining. But one thing I wanted to ask out of the gate is, you've been through various cycles here. You've seen cycles all the way back to when you got in the business on the investment side. Coming out of really, the data that I looked at with the junior miners specifically, in terms of the bear market we saw from 2011 until January of this year, was the worst ever, really in 90 years, was the data that we went back to with percentage term and duration combination. What's your sense on how big of an opportunity going into the next bull cycle? I know you're bullish like I am, and you think we've entered a new bull cycle. Is this the biggest opportunity you've seen?
I'd have to say yes. Yes, there are more people coming into the space than we've had before. The metal ETFs expanded the market considerably of gold investors, and I believe they're going to be looking at the performance of gold to date and also at the equities and saying, look, the equities are moving far faster than the metal, and I should not only have some of my gold ETFs, I should have some more equity. And I think you'll see the last run we were in, gold moved, a lot of the money went into the ETFs. Now I think you're going to see the ETF money coming into the equities. So I think it'll be a much stronger market this cycle.
Great, agreed. And so we know that you, before McEwen Mining was US Gold, before that was Gold Corp, which you were at the helm of. I had asked you yesterday, maybe you could rehash a little bit. How'd you get into this crazy business back in the day?
Well, it started with my father. He had me charting stocks when I was 10 and 11, and at 12 I made my first investment. I have to say it was my worst, because I made 9 times on my money in 18 months and thought that was the way the market always works. I found out quite quickly it didn't work that way. He took a keen interest in gold in the mid-60s. He put all of his clients into gold bullion and South African gold shares and some North American. Gold started at $35 an ounce and ran up to $850 an ounce. His clients were happy, and I became a big believer in gold as the ultimate currency, the real form of money. And that there are exploration stories out there that can become very big. And I spent my first 18 years in the investment industry, doing retail, institutional sales, some corporate finance, research, managing portfolios of gold investment funds that bought bullion and equity. And then I took a closed-end investment company that I controlled, and over a period of 8 years, bought a number of companies and did a consolidation, 3 consolidations to create Gold Corp. At the time, the closed-end fund was trading at a 50% discount to its net asset value, and gold shares at the time were trading at 2 to 3 times their net asset value. And I reasoned if I could take this cash-rich holding company and put it together with a cash-starved mining company, I could get a lift. I mean, if I just opened up the closed-end fund, I could have got 100% of my money, but I saw the opportunity to make 400 to 600% of my money by aligning it with a mining company. I then bought control of a couple of mining companies and thought I'd do the financial architecture and let the mining guys run it. 4 months down the road, I came to the conclusion that was a bad decision. And over the next, well, within 6 months of that time, I replaced the boards of directors of the 2 mining companies, stepped in as the CEO, and over the next year replaced the entire senior management team and built Gold Corp over the years. I found an industry, though, that had a great deal of inertia, and having come from the investment industry, I found, well, if you had a problem, you could sell it in 3 days and it was gone. In the mining industry, it's a little different. It takes a lot longer to resolve your problems. The analogy I use, it was like I dropped both my feet into a quick curing vat of cement, and I couldn't move very quickly. But nevertheless, you ask everybody in the industry, why are you doing it this way? And the common refrain was, we've always done it this way. And that was a lousy answer from my perspective. So I set about changing we always do it this way. And Mother Nature came along and delivered us a lovely gift. And I just said, all right, we're going to go for the brass ring. And you told all our geologists, you have to run 150% of what you've ever run before, because this is a rare opportunity. But there are assets that will come around. There is no shortage of discoveries. They come every cycle and ignite the fire and bring the people into the marketplace. So that's how I became exposed to the gold mining industry and somewhat addicted to looking at exploration plays, because that creates a lot of value.
Great. And so back in the Gold Corp days, early on, I think I had read that when the initial company was formed, it was about a $50 million market capitalization. And when you exited, I think it was very early 2000s, it was closer to 8 billion. Are those numbers accurate? And the 90s were a pretty bad bear cycle. How do you attribute the success in terms of growing the company so well, besides the obvious in terms of the discovery? What do you attribute such success to?
Well, the value of Gold Corp dropped down to about 50 million. Market value, the net asset value was higher, it was about 100. And then we bought these, I bought 2 mining companies, Dickinson Mines and Wharf Resources. And it was really, the Dickinson mine, which we now call is Gold Corp's Red Lake mine, was located next to another mine that was owned by a company called Placer Dome. And they'd both been started at about the same time by the same person. And actually, it's a curious story because this fellow, Arthur White, controlled both properties, and he didn't have enough money to develop both properties. So he took a coin out of his pocket and flipped it and said, okay, I'm selling the Campbell mine, I'm keeping the Dickinson mine. That was a bad flip because the Campbell mine had produced 40 years later 3 times as much gold as the Dickinson mine. But so the mine I bought had been starved of capital for 15 years. It had bad labor relations. Management had taken money out and not put it in. They hadn't spent any money on exploration. The mine next door was very rich, and the opposite experience. There'd been over 150 million invested in it. So it was quite profitable, it was quite low cost. The main ore body was common. They had a high-grade deposit that was closer to surface, and it was felt that our mine didn't have any further high grade. After I got rid of the debt, I retired the debt over a couple of years in that operating company. I then gave our exploration geologist $10 million and said, go explore. You haven't explored for 15 years. And I thought there'd be more gold there. There was much more gold than I thought, but they came back 3 months after I gave them the money. They hadn't spent all the money, but they came back and said, Rob, we have something you might like. We have 9 drill holes. The average grade happens to be 30 times the grade we're mining, or the concentration of gold per ton. It was 9 ounces per ton over an average width of 8 feet. So the stock took off like a rocket, as you could imagine. And then we kept exploring. The gold price was falling. This was in 95, we made that announcement. Gold price kept falling until 99 and 2001. down to 250, but we kept putting more money in. And I said to our geologists, after the initial discovery holes, I said, have you spent all the money? And they said, no. And I said, spend it as quickly as you can. If you keep finding more like you've just found, I'll give you another 10 and another 10 after that. And we kept going. It kept growing. And then our geologists said, well, we've got enough here to build a mine, a new mine. Our operators wanted to build it. And I said, well, how much bigger is it going to get? And the geologist went, well, we don't know. I said, that's a lousy answer. And how long is it going to take you to find out? And they said, another, I don't know. And I said, I don't like that answer either. And that led to the internet contest we had back in 2000 called the Goldcorp Challenge. And we basically spent $500,000 building the system. We gave out $500,000 in prize money, and we found $3 billion worth of gold. So that was a pretty good trade using the internet. It was one of the first successful examples of incentivized crowdsourcing. So we kept, and during this period, our workers went out on strike in 1996, and they stayed out on strike for 46 months. So the better part of 4 years. And we didn't produce any gold from the mine. I just kept pushing the exploration side. And when they went out on strike, we were producing 50,000 ounces of gold at a cost of $360 an ounce. When we went back into production, we were producing just over 500,000 ounces, or 10 times as much. And our cost of production was $60 an ounce, 1/6 the cost. So there was a 60-fold change in the economics of the property. We had 67% gross margins, 37% net margins. It was a very profitable mine. And it made a lot of money for all of our shareholders, and I was the largest individual shareholder, excluding our institutional shareholders. Fidelity was our largest shareholder.
Awesome. And why did you end up leaving Goldcorp? You can be brief on that. And then with regard to MUX, initially US Gold Corp, curious, what was your vision to build at that time, and how close are you, over a decade later in terms of hitting the mark?
Okay. Well, the reason for leaving Goldcorp was there were probably several. One, there was an unexpected event, 2 deaths in my family, and all of a sudden I was sitting at the table with someone I hadn't anticipated seeing, and that was mortality. So it's reset some of my priorities. Also, I found that we were listed since '95 on the New York Stock Exchange, and Sarbanes-Oxley came along, and I watched our board spending more and more time on checking off boxes and saying, are we in compliance with this, this, and this? And I said, remember, I was the largest individual shareholder. My focus was to see how we could build value per share. And the last 13 years of our life, I mean, our share price compounded at better than 31% a year. So board meetings went from 1 hour to 3 hours, and we still weren't building value. And I felt that I always like to keep things very simple, and I want to give our shareholders a chance to understand what the information means, whether it's financial statements or communications. And I just said, I'm spending too much time trying to simplify the application of good corporate governance. And I said, I think it's time for me to leave. Now, at the time, we had $400 million in cash. We had no debt. We were the lowest cost gold producer in the world. And I said, this is a good time to go. I announced that I was going to leave to the market, and the market didn't like that. But the board did a search, and they came back and said, we couldn't find anyone to replace you. You have to stay. I said, no, I'm leaving. And I saw a company. I went to a lunch, and it was a company called Wheaton River. And I went, wait a moment. They produce the same amount of gold as we do. And at the time, we were producing 600,000 ounces. They also produce copper. They trade at 1 times net asset value, and we're trading at 2.5 to 3 times net asset value. And I thought, okay, they're being valued as a base metal because 40% of their revenue is coming from copper. So I thought, well, there are other models in the market. There is Newmont and there's Placer Dome, and they have 19 and 17% of their revenue coming from copper, but they're trading at multiples better than 2 times net asset value. So if I combine Wheaton River with Goldcorp, that 40% of revenue that Wheaton River got from copper would decrease to 20. And I said to our shareholders, let's put these two companies together. And I believe that within the next 12 months, our share price will double or triple, just without a movement in the gold price, just a re-rating. It took 14 months for the share price to triple. And I had approached Wheaton River and said, look, I've already told the market I'm stepping down. They were 2/3 our size. They didn't have any operations approaching our size and scale and richness. I said, look, I'm stepping down. I'll pay you a 7% premium to bring it together. And why don't we move the head office to Vancouver, where you're located? And I said, I'm going to sit back and watch this stock go to $100 a share in time. And it should have. Unfortunately, the management that was there liked doing deals, and they made a bid the next year for Glamis, and they issued 80% of their stock at better than the 30% premium. And they weren't going to give their shareholders a vote, didn't give their shareholders a vote. And I thought that was wrong. They should have explained why they thought this deal was good and given the shareholders an opportunity to vote. I spent $1 million in legal fees to try to get a vote for our shareholders, and I was still a shareholder. They hired 22 lawyers to ensure that that didn't happen. The Toronto Stock Exchange, after that contest, decided to change the rules, but not at the time, but as a result of our charge on them. So that was why I left. And then I started thinking, well, I actually had thought of doing something with our Goldcorp Challenge idea. And people started coming through with ideas about various mineral properties. And I thought, well, if I'm going back into spend more time in minerals, I'd like to focus on exploration. When we were building our Red Lake mine, because we tore down the old one and built a new one, and that was in 2000, 2001, I watched that the costs of building a mine were going up, and steel prices over the term of that contract increased by 35%. And so I thought, well, the place to be is in exploration, not in production, because production costs are going up fast. So I said, all right, I want to be in an area that's very prolific for gold, very prospective. And so that's Nevada. I wanted to be in a dollar zone because I felt gold was going to climb faster in dollar terms than other currencies. And I wanted to be in the largest market for gold shares in the world, and that was America. In fact, it was America and it was Nevada. And so US Gold had property in the Battle Mountain Cortez Trend, just below what was then Placer Dome's Cortez Hill Mine, which is now Barrick's Cortez Hill Mine, and is Barrick's largest gold mine in the world. And their biggest recent discovery is on that same property. And so I bought a property there, and then a year later we acquired 3 other properties that adjoined our property to make a larger land package there. And we started exploring. One of the companies we acquired had property in Mexico. And so there was some high grade down there, and I'm always attracted to high grade gold. Red Lake was, I should just say that Red Lake was a very high grade mine. The average grade there was 68 grams per ton, which is better than 2 ounces per ton. So it was extremely high grade, beautiful to see underground. I mean, just look at the rock, there's jet black volcanics, and then the gold and the quartz, white quartz. It's we sold a lot of samples from the mine. And I actually thought at one point, maybe we shouldn't be mining high, so quickly. We should just be selling samples. And Eric, when we opened the mine, I took 40 analysts up to the mine and we had dinner. And at the end of the evening, I had our geologist set out 11 rock specimens with visible gold in it, and we had a silent auction. And at the end of the night, we sold those 11 samples that amounted to 11 pounds of rock for $1,100 or $100 a pound. And I said, we're doing this the wrong way. We should be just selling specimens, because if we got $100 a pound, that'd be $200,000 a ton that we can sell the rock for. You don't have to produce a lot of material. We have a mine with a lot of visible gold. So we go in, we blast. I have the geologists go over the broken rock that had come from a blast, and they'd pick out all the visible gold, and they'd carry it up in a strong box up to our safe, and then it would be marketed over the web, and we'd sell it for 3 to 6 times the gold value in it. But there was a rarity value. It was in rock that was 2.7 billion years old. It came from a mile below surface, and every piece was unique. So it was that. Along the way in Goldcorp, my largest expense was corporate taxes. And I thought we were producing, as I said, we had very high profit margins. And the government of Ontario, where the province where the mine was located, had announced they were going to reduce the tax rate, our tax rate, by 6% over the next 4 years. And I felt very positive about the price of gold. So I said, why don't we withhold gold from the market? And so we would produce it, but we wouldn't sell it. And I felt if we did that, we could increase our financial resources by the reciprocal on the tax rate of the amount we didn't sell. So we started off, we held back 10% of our production. Then we got to a point we were holding back 30% of our production. And so it wasn't exposed to tax. But you could borrow against it at its face value, pre-tax. You could instantly liquidate it, but it just expanded our money supply. And at one point, we had more gold in our vaults than 57 of the 110 central banks in the world that held gold. So, and unfortunately, when I put the new management in, they wanted to sell the gold because we had a big gain there. But if we'd kept that practice up, there would have been several $1 billion of gold behind every share, behind Goldcorp now. But that's another story. So I gave you the criteria why I was how I was looking for my next venture, and that was a dollar zone in a very prolific area for gold, which was Nevada, and I wanted to be in the largest market for gold shares, and that was America. And I wanted to get into the S&P 500. So the S&P 500, you have to have a large market cap today, $5 billion. So we're a little bit away from that. At one point, we were much closer to it.
Sure.
But there's a real, in my mind, competitive advantage for getting into the S&P 500. Well, I'll start with 99.9% of all the precious metal companies in the world cannot qualify. Because in order to get into the S&P 500, you have to be an American company. And we're a Colorado incorporated company, so we meet that test. Right now, there would be Coeur, Hecla, ourselves, and then the list of companies is tiny after that. And their market caps are tiny. So why would you want to be in there? One, there's over $1.7 trillion invested by index funds in the S&P 500. And there's only one gold stock in there, and that's Newmont. There's another mining company, Freeport. It produces copper and gold. But those are the only two that produce gold in the S&P 500. So $1.7 trillion. And that allows you to have a more stable shareholder base and lower cost of capital. So that's the game plan. we meet all the criteria other than the market cap, and we have to link together 4 consecutive quarters of earnings, which we're working on right now. So in order to get there, we have to have some good organic growth, and last year we produced about 150,000 ounces of gold equivalent. This year will be a little bit less, 144,000. We're permitting a mine in Nevada, which we hope to start building in the second quarter of next year. So on an annualized basis in 2018, we'll be up to 200,000 ounces of gold. And then we have another project in Mexico. If silver gets above $18, $20 an ounce, we'll put a shovel in the ground. It's fully permitted, ready to build. But I've been holding off, saying I don't want to build if it doesn't meet criteria. It has to generate better than a 20% internal rate of return, a payback in less than 3 years, and have relatively low capex to build it. So about 18 to 20, where there'll be another project on stream there. So we have that. We don't have any debt today in McEwen Mining. We have 46 million in cash. We haven't sold any royalties or metal streams, which I think are the scourge of the mining industry. I think the industry's really sacrificed a lot of profitability by selling royalties and selling metal streams or hedging. It's the hedging of 10 years ago, the comparable. So we have two production sources, one in Argentina that is a silver gold mine, another mine in Mexico, which is gold. And I think silver is another element in our story, in that I think the exchange ratio between silver and gold is going to compress and open up our profit margins as a result of that. And certainly we're seeing it in Argentina right now, and it's just a massive turnaround with the new government. But I'm getting beyond the question you asked.
No worries. I wanted to touch on that next with really just the McEwen mining story, which you touched on. One thing that we could segue into, which is Los Azules. This is a monstrous copper deposit, and I think when I look back at my initial report, which was about a year ago, McEwen Mining was at $1.09, and I had mentioned it there. I just reread it before we talked, and I was pretty convinced you were going to sell that off. And that may or may not be your strategy, but there's a lot of value there. Can you talk a little bit about your Argentina assets?
Certainly, Eric. We are an asset-rich company. Beyond the gold and the silver, this copper project, Los Azules, is located in Argentina, between 3,500 and 4,000 meters, so about 11,000 feet up in the Andes, close to the border with Chile. We have outlined there, and it's largely inferred, so just a resource of 19.7 billion pounds of copper, a little over 3 million ounces of gold, and just under 100 million ounces of silver. If you were to convert that to gold equivalent, just for comparison's sake, that'd be equivalent to more than 35 million ounces of silver, or gold equivalent. If you combined it with all of our resources, and they're all put on a gold equivalent, we'd have just under 46 million ounces of gold equivalent. And I know this is a bit of alchemy and a stretch, but it's just showing some of the value. That would work out to 0.15 ounces of gold equivalent per share. But Los Azules is a big project. We have a PEA on it that contemplated, and going back to gold equivalents if you want it for a moment, it contemplated producing in the first 5 years 560 million pounds of copper, and then for the next 30 years producing 400 million pounds of copper. Now, the price tag on this, and it's very preliminary, was just under $4 billion. So in the last few years, our balance sheet didn't have the strength to do anything like that. So that was for 150 ton a day, 150,000 ton a day process plant, which is a very big mine. We're looking right now at scaling that back and seeing what alternatives are and what the economics might be. At the same time, we'll be moving in there and doing more exploration when the season open up. It'll be the end of this year, beginning of next, because it's to get in there. There's a mountain path, 2 mountain passes you have to go over, and at the moment every winter they get filled with snow. So you have a window of about 6 months. We've been talking to the Argentinian government for quite a while about putting an airstrip in, so we could be active there year round. With the change of government, we're getting much more encouragement that we could put one in. But it's, and you're quite correct, several years ago we engaged a dealer, investment dealer, to see if he could sell it. Unfortunately, it was at a time when the market was weak, major capital projects were out of favor, and there was no bid. But with improving metal prices, the interest is starting to pick up again, so there'd be an opportunity. There have been 2 sales in the area, one a property 40 kilometers away. It's slightly lower grade. We're 0.5% copper, and it was, I believe, 0.44% copper. The Altar property that Stillwater Mining bought, they paid 4 cents a pound for a resource, and then that would have been in 2011. In 2014, First Quantum purchased Lumina Copper, which owned the Taka Taka property, which is about 600 kilometers north, or 450 miles north of where we are, and they paid 1.5 cents a pound. So you can do the math. We have 20 billion pounds, and someone made an offer at 4 cents a pound, maybe even 3 cents a pound. We'd be quick to hit the bid.
I wouldn't blame you, but that's a nice asset to have in the mix. It's funny because I was thinking before coming on that the price target I put on McEwen Mining, and I think in terms of, and you're a U.S. corporation, MUX on the NYSE, U.S. dollars, not Canadian, but I had put a 12 to 24 month price target of 3. That was 1 year ago from this month. We hit the high or mid-high 2s. Mm-hmm. I think you're probably days to weeks away from another breakout up to test $3. And when I was looking at the valuation again, and even hearing about, it's a little bit of a stretch what you put out there because we're dealing with all pockets of the reserve qualifiers, but it puts the imagination in place in terms of you've got some enormous assets, and really to get to your goal of the S&P 500, I think with your market cap now, what is it, about 500 to 600 million, somewhere in that?
About 750.
750. So you're still talking about 7x from here. Which, not too bad. And so another thing that I look at a lot is long-term charts. And I had put in my report, there's straight lines from when US gold just had gotten started to the crash in 2008 and 9 to this last year when we were touching lows again on the monthly 10-year chart. And then there were 2 instances. One, when you first signed on, and there was a lot of enthusiasm in the vehicle that you chose, and the stock went to 10. It was pretty brief, but it did. And then again in 11, I believe it went to $10. And I think that's where it's going again. There's actually, I'm actually convinced of it. So I'm going to be redoing a report and raising my price target from $3 to $10 within the next, we'll call it 18 to 24 months, late 2017, maybe give myself to 2018. And as we know, this market can really, these things can boogie. And, now with where everything is and the severity of the bear market, we could see new highs fairly easily. So I think that's people think it's crazy, but you and I know this business, and you know this is where we get 100 baggers and 50 baggers, and that's why we do. That's why we're here and we deal with the last 4 years. So I'm not afraid to swing the bat. People, you know, it's not hype. You have a great track record and also with the assets. I know we've got to wrap up here soon, and I'll speed this up for the wrap. I wanted to ask you a couple of personal questions in a sense. You know, you've made a lot of money, and you know, you've done very, very well for yourself. I don't know your exact age, but what is it that keeps you motivated at this stage? When you wake up in the morning, what are you shooting for?
There are a couple of things. One, my wife and I set up a center for medical research in Toronto called the McEwen Center for Regenerative Medicine, and it does a great deal of work in the stem cell area. It's grown considerably, but to me, regenerative medicine and stem cell research holds out the promise of profound change to the delivery of healthcare, both in terms of cost and in terms of helping people cope with diseases that right now don't have a cure. So we've put a lot of time into the center, a lot of money. We're very passionate about it, and a good portion of the wealth that's created from McEwen Mining will be heading in that direction. It's healthcare and leadership studies, entrepreneurship for high school students. To me, we have to build leaders, and we have to have a healthy population. And I find that, you know, just sitting on a pile of money isn't very satisfactory. You can do so much more with it and benefit so many people around you and around the world. We have a prize we give out annually. It's $100,000 for innovation in stem cell research. Our first winner was a Japanese researcher by the name of Shinya Yamanaka. 2 years after he received our prize, he won the Nobel Prize for the same work. And we've got to finance a few more Nobel Prize winners. Find them and finance them. So that's one thing. The other, when I built Goldcorp, it gave a lot of independence, financial independence, not only to the people that were working in the company, and I think that's very important, but also to our shareholders. Building the ability to have financial independence, to take away a lot of concerns. I want to do more of that. I think when one has the freedom to choose where they want to work and how they want to work, it's a great place to be in life. And the more people who get there, the more people who want to preserve our society.
That's awesome. So with regard to the McEwen Center, I just thought of this, but a lot of that research is fairly early stage, but is there anybody that could be listening right now that has a specific disease where you're seeing strides in the science that you could actually help today?
Well, right now we're doing, it's called Disease in a Dish. So I'll go back to Shinya Yamanaka. He changed the field of regenerative medicine and stem cell research. Before, it used to come from the embryo, and that was the huge controversy of embryonic stem cells. He was able to take a skin cell, so you could take a little piece of your hand, a little clip of the skin, and take that skin and reverse engineer it into a stem cell, into almost a near embryonic state, and then from there you can grow any part of the body.
Wow.
So what we've done, and it's happening more frequently, is someone has a disease and you're now able to take their skin cell, and let's say they have a heart disease, and they have an irregularity in their beat of their heart. We can recreate that cell and that irregularity in a petri dish, like one of those little scientific dishes. And And we can multiply that many times. And so you can come along now and apply different pharmaceutical cocktails, mixes of drugs, to find one that neutralizes the disease and without having adverse effects on the body. So there was a young girl in New York at the Mount Sinai Hospital there, and she had a disease called long QT syndrome. And this is a disease that leads to teenagers dropping dead on a ice rink or a baseball field or a football field. It's an irregularity in their heartbeat, and it just stops. So doctors hadn't been able to find a way to neutralize this. So they took a clip of her skin, sent it up to our lab. It was reproduced many times and then sent back to New York, and they started playing with different I'll call them cocktails, and they came up with one, and it's no longer a problem for her. It's been neutralized. We have, right now we're doing experiments in pigs. Our principal researcher, Gordon Keller, has been able to make all the major heart cells, muscle cells in the heart, and of which there are about 6. And then we have a fellow who just joined us from the University of Washington, Michael Flam, who is an electrocardiograph fellow, and he sort of kickstarts these muscles with an electrical jolt. And he has experimented if you have a heart attack, part of your heart muscle dies and it becomes flaccid. The pump doesn't work as well in the bottom of your heart, the ventricle. So this scar tissue contributes to the poor efficiency of the heart. He is populating scar tissue now. They've done it in a primate, but now they're doing it in pigs. And when you populate the scar tissue with about 1 billion heart cells, that scar tissue is turning into muscle. So maybe one day after a heart attack, rather than having a pacemaker put in, you could have these cells put in and forego the necessity of a pacemaker and the operation and the huge cost of having that done. Another one of our researchers came up with a solution to perfuse through lungs that are available for transplant. And prior to him coming up with this method, 90% of the lungs that were made available for transplant were rejected because of time or quality. He was able to take a suboptimal lung, put it on a ventilator, perfuse it with this solution, and in 2 days, he could bring it up to the standard that it could be for a transplant. They've done over 100 operations now. They've cut 8 days out of intensive care post-op. And their survivalship is longer than had compared to the grade A lung that was transplanted. So they're big inroads. We're playing with sheep right now. Not playing. We're testing sheep, and it's moving in possibly into racehorses, regrowing cartilage in the knees. So there's quite a range, and our center, our tagline is basically collaborate, create, and cure. I don't really care. My wife and I really don't care where the cure is created, but if we can facilitate a cure to a disease and it happens anywhere in the world, then it's benefiting the entire world. So our lab pushes out product to 120 labs around the world. And I was really glad to see it one day. I dropped in to see a friend in Iceland, and he said, "Would you like to go meet our research people?" And he took us over to their principal hospital, and we were meeting all their heads of research. And one of the researchers came in and said, "Hey, I've got some heart cells from your lab in Toronto." And I went, "It's working." Yeah. The collaboration is pushed out there. So that's one of the areas that I have a passion beyond. And So, but McEwen Mining, I think it's, I have a lot of money invested in it. I don't take a salary. I don't get a bonus by my choice. I don't have any options. The only way I'm going to make money is the same way as my shareholders, and my cost base on my 25% interest is $127 million. I wanted to be right beside my shareholders. I'll make money the same way my shareholders do, and that's a higher share price.
But your cost is almost $2, isn't it? $2 a share, somewhere in there?
A little bit, just below that. Yeah, I have 75 million shares.
Wow. Well, we're not high above that. The last question is, you can make this one quick. For the, you're about creating wealth, and it is for your shareholders. And my big challenge in a bull market and a bear market in such a volatile sector is getting people to do things at the right time. Our emotions, people that trade on emotion, invest on emotion, they tend to do things at the worst time. They buy things when they're high, they sell them when they're low. We're coming out of a bear cycle that was brutal, and our belief, I'm sure we're on the same page with this, is there's a long way to go on the upside. What would you have to say specific to investing in McEwen Mining, but also just in this sector, to the high net worth individual who's been burned in the past and he's still cautious and fearful and waiting? Because we know timing is so important. Are you convinced now's the time to be putting chips on the table?
The reason for owning gold or silver hasn't changed. The monetary base is being eroded. Continuous quantitative easing, more debt. It's not just America, it's all the developed world that's doing this. It's a grand experiment, and we don't know what the outcome is, but if you read history, whenever governments expand the money supply and take on as much debt as governments are doing today, it hasn't ended well. The people that should be there enjoying their life are suddenly finding they can't earn a return on their capital. I mean, we're looking at 0 interest rates right now. It's forcing people to make riskier investments. Home ownership, the workers' share of the economy, the number of people on food stamps, all of those are saying whatever the government's doing, it isn't working very well. It used to be said that the reason for not owning gold was it cost you to store physical gold. Today, it's costing you to store cash in a bank. Right. So it's time to be looking there. The gold market, particularly in North America, was, I'd say, blinded by a bright white light. And that white light was gold was falling in dollar terms, and people said, it's falling, I'm not going to invest. And the biggest gold producer in the world, Barrick, was falling out of the sky. Gold went down 45, Barrick went down 80%, and it was falling until last October. And no one anywhere that I talked to in North America was saying gold, well, I won't say anyone, but the majority of people were saying, I shouldn't be buying gold because it's still falling. It's a lousy investment. I happen to look at it the other way, saying, seeing something down 90%, it was time to buy. We have had some good bounces, but if you look at the producers, they fell twice as far as gold fell. And they have considerable room on the upside to get to their old highs that were established in 2010, 2011. And it's sort of like if you can think of a coiled spring being compressed, it was pushed right down to a point you could no longer push it any lower. And now the pressure's coming off and people are coming in, and this spring is starting to expand quite dramatically. So I think individuals, high net worth people, should be thinking about, the government's telling us there's no inflation, but take a look around. Housing prices, high-end art, your insurance costs, school costs, food costs, they're all sorts of illustrations. If you want to believe the government there's no inflation, you're fooling yourself. So one of the best ways of protecting yourself against inflation is getting into precious metals. It's not the only one, but right now it's one of the ones that's been severely depressed, and there's considerable room on the upside. Just look at the charts where the old highs were. Your cost of entry is low. There was big turnover in the shareholder base. So there's not a lot of selling to come out at this point. They've already sold over the last 4.5 years. And the industry is quite small. The amount of money that's in gold is tiny. For a small amount of money, I see some large gains coming.
Great stuff, Rob. I could talk to you for hours, but we got to jump. Hopefully we can do it again maybe later in the year, but thank you for the update and your time. Appreciate it very much.
Thank you, Eric.
Have a good day.
Cheers.
Bye-bye.